The rumour mill went into overdrive last night as investors speculated on additional measures to be undertaken by the European Union to defuse the ongoing concerns about the European debt crisis. Top of the list with hopes that the European Stability Mechanism, the ESM, which is effectively the fund which is intended to rescue ailing European governments, will be granted a banking licence. The key point with this is that it would allow the ESM to effectively buy government bonds from those ailing governments at a relatively low interest rate and pass them to the European Central Bank for more cash. However, the European Central Bank governor basically came out and poured very cold water over those rumours. However, there was a significant effect on the bond market with both Spanish and Italian bond interest rates falling backwards. On the other side of the channel, however, the news wasn't so good. GDP data out of the United Kingdom indicated that their economy had contracted by around 0.7% in the quarter ended 30 June. Looking at markets then, the Dow was up 50 points, having been up nearly 100 points, but weighed down by those European concerns late in the day. Most European markets were relatively flat, although some actually were marginally in positive territory. In currencies, the Kiwi was up against the US and of course against the pound on that poor GDP data. Yesterday, the Department of Statistics released its overseas merchandise trade data for the quarter ended 30 June 2012. Effectively, this data looks at the value of imports into New Zealand over the quarter and the value of its exports. Looking at exports, overall, the seasonally adjusted value of New Zealand's exports fell by around 1.6% over the quarter relative to the first quarter of 2012. This is a fall of around $180 million down to a total export value of around $11.3 billion over the quarter. One of the primary drivers behind this was in fact a fall in the value of the exports of milk powder, butter and cheese, which fell around 5.7% relative to the previous quarter, around $160 million. There's a similar story in terms of meat exports. Meat exports fell around 1.5%. Interestingly, however, though, volumes were up relative to the March quarter, which indicates that value was down. The key outtake, though, is that most farmers will be well aware of these sort of figures, primarily because they've seen them reflected in their farm gate prices. Farmers potentially won't be looking backwards in terms of this data. They'll be more interested in what's going to happen going forward, particularly in terms of the impact of the European debt crisis and the drought in the US on ongoing seasonal prices this year.